Good morning. This is Oscar with Biscuit Capital. Today's Saturday, February 25th. I'm going to do a video, hopefully not that long, share some thoughts on the market. It's been a very momentous, tumultuous week. And I wanted to share a few charts with you guys. Obviously, I want to know what you guys think. If you want to put a comment, that would be greatly appreciated. And hopefully you like and subscribe to the channel. I'm going to try to do these videos with more frequency because I think that we're entering a very interesting time in markets. And if you follow me on Twitter, you basically know how I feel about price. And price is telling me that we may see some nice swings in a lot of assets and open up a lot of opportunities for us as traders in the upcoming days, weeks, and months. So with that, let's start with a few charts that I really like. I have up here the chart of gold. Again, if you follow me on Twitter, you know how I feel about gold. You know I'm a little bit bearish, or not a little bit bearish, but a lot bearish gold. I see here a count, and I've labeled it with Elliott wave here using TradingView, and I see a wave 5 truncation. This could be the beginning of a new count lower. It could be a structure, an ABC corrective structure. Either way, I think that we just finished either a wave 2 or a B wave in gold. And I think we're heading lower, right? If this is an ABC structure, typically A equals C. If you see this, I've cloned these arrows. So it could be that gold heads significantly lower towards the 1500 area. I think there's a high chance of that happening. I like this chart. I like being short gold. And we're going to go over some rates charts as well that favor this view. But this is one chart that I like. Being short gold, being short silver, I think they are crowded markets, and I think that we're going to see weaker precious metals going forward. Another chart that I really like, and this is a position that I have, and I've been accumulating a little bit, is natural gas, and this is why. I want to go to the daily chart here. This is, if not my favorite pattern in charts, one of my favorite patterns in charts, the ending diagonal, right? When I see an ending diagonal break out like this, I get really excited, and I know that there's going to be an opportunity, and specifically in a chart like this one, where I see seller exhaustion here. This move has been very violent. I think it's washed out a lot of positions. When I look at the relative strength, I see now it flatlining and turning higher, obviously with this turn here. But even this low, after this low, when it started making these lower lows, there was a lack of momentum here. RSI started turning higher. So I know that this represents seller exhaustion to me. Now it broke this diagonal. So now it's great to be long, risking these recent lows. So I am long natural gas, risking these lows. I think we're headed much higher. I think we're headed probably to somewhere in the $3.50 to $4 range. So I think this has great convexity. You're now re-risking the lows, and you have tremendous upside to go on this. So two charts that I like right off the bat are gold from the short side, natural gas from the long side. Now let's go into the bread and butter of markets. I want to see what rates are doing. I'm going to start with a 5-year. Obviously, on Friday we had PCE, and I think that now the market is starting to realize that inflation is going to be stickier, right? That we're going to see stickier prices, higher for longer. And this is reflected in bonds, I think. The move that we saw on Friday, this is a pretty particular candle. And again, another ending diagonal right here, a breakout. And this candle right here that we saw on Friday is a bullish engulfing candle. So if we start seeing continuation here, this has a shot of going much higher, right? This is a 5-year. Similar story with the 2-year, a little bit more of an aggressive move here. Another ending diagonal, another breakout with a nice gap, another very aggressive bullish engulfing candle. This tells me that rates, at least the 2s and the 5s, I think they're going to go higher. If I look at price, which is basically what I look at, without clouding my views with any type of macro analysis, when I look at just price, I think this is a very aggressive chart, right? That has, like I said, a very aggressive candle on Friday, bullish engulfing. So I think this is going higher. I think rates are going higher. Now, what does that do to the thesis of the dollar, right, and gold? Well, I show you the gold chart. Let's look at the dollar chart, right? The dollar chart. These are daily charts, right? We can even look at the weekly chart in the dollar. How that move, I think now, I can say with some type of certainty that this move was corrective, right? That if I look at the move that we saw, and again, it was a very, very big move higher, the dollar did. It corrected lower from the beginning of the move to the height. It corrected to the 50% line, which is pretty impressive, right? Kind of coinciding with these prior highs during COVID. And now we're starting to move higher. Now we're starting to move higher. Now we've had 4 consecutive weeks of higher prices in the dollar. And I think that barring any small correction, I think that this is headed higher. And let's look at the daily chart. Let's look at the daily chart for that, right? And focus on this move here. This is what I call the corrective move. And now we're entering a zone here that if it breaks out, right, if this starts breaking higher above this 200-day, which should offer some resistance, right, some tradable ranges here. But if this starts breaking higher, I think we could start seeing a little bit of an aggressive move in the dollar as well. And this coincides well with risk off, right? And I'm going to show you a couple of charts that I think bode well for a risk off move going forward right now. So I like the dollar. I don't like gold. I like natural gas. And, of the dollar pairs, one of the charts I posted on social media is dollar Swiss, right? This broke a range. This broke a channel. I think that the 200-day is a good bet. And if I add the 50% retracement line, it kind of coincides with that. So I think that we're going to see higher dollar Swiss prices here. Same with dollar CNH. I've labeled this the panic zone. I think we're in a bigger count here. Let's go to the weekly chart. Here we go. So this zone here that coincides with this congestion area, if this starts breaking higher, I think that we could see, and we're right now right in a Fibo congested area. It's been a nice move higher, but if you see the moves in dollar CNH, they are not subtle, right? Dollar CNH tends to, same with dollar Swiss, tends to have these big moves either higher and lower. And I think that we're at the onset of a big move now. This could double top, or this could fade out somewhere around here, but I think it has more upside, right? Specifically, if I look at the daily chart, when I see this daily chart, I can see here a count and this bottom, this lows here that were preserved, that were respected right on the Fibo. So it tried once, failed, tried again, failed, and it just shot higher, right? And now I think we're entering this panic zone that is probably going to coincide with some risk off, higher rates here in the US, lower rates in China. So there's a little bit of a divergent central bank theme there as well. So I do like dollar CNH higher. Another dollar chart that I like is dollar against the Swedish kroner. I think this has a tremendous amount of upside. This whole congestion here, again, with a dollar theme, uh, this whole area here of consolidation, I think breaks to the upside. Um, let's look at the weekly chart. And I have the Fibos drawn. Oh, let me put them back. I have the Fibos drawn there. It's a simple analysis. I think this has a bunch of upside, right? I think that we could see this break out quite a bit. So I'm happy holding a long dollar position, specifically against currencies where I'm earning carry, like CNH, Swiss, Swedish kroner, stocky, even dollar yen that has had quite an aggressive move. I think it has more upside as well, right? So I like the dollar higher. I like gold lower. Obviously, I do like natural gas higher as well. And now let's look a little bit of equities and see what that is showing us. Um, One of my friends, market friends from Pepperstone, made me aware of this structure. I think this is more so than a diagonal. I think this is very reminiscent of a bear flag. And it's breaking under it, right? It's breaking this support line. The 200-day is right here. I think the market is now realizing that we could even go higher in rates. The bond market is telling us that. So I'm pretty bearish equities. This has been in trader talk, sloppy slop fest. So this has been choppy. But this resembles to me a nice bear flag on the daily chart, a big one too. So I wouldn't be surprised if we start seeing U.S. equities lower. Um, let's look now at the DAX. And I'm going to go big picture here. This is the monthly chart of the DAX, German equities. This has been a train. This index has been tremendously resilient. But if I look at this monthly candle now in Feb, is very suspect to me. And I'm labeling this a B wave. I've been labeling this B wave for a while, and it's been chopping higher. But now I look at this structure from the count going back to 2009, so a big cycle count, corrective wave A or wave A, corrective wave B, and now if, as an Elliottician, if I see an ABC pattern where A equals C, I know I can trade against this high. This is where I would be wrong if I'm short, expecting a nice dump in the DAX, right? So about a 25-30% dump, and I'd be risking 300 basis points. So there's a lot of convexity, I think, in being short German equities here. Same with British equities, right? And let me go to the FTSE. Let's go to the weekly first. So you see the full count. I think that this is a cycle, corrective wave 4, wave 5, and now I think we're going to start a decline lower again. And I'm going to go to the daily to show you what I mean. Why this is a sensible bet for me is because I can trade against these highs, right? And I can break this chart down and know what the Fibos are, put a minor count in here, but trade against these highs, basically start building a short position now that it's broken this wedge, another end in diagonal. Typically, they retrace back to their origin. So I would put this wave now, this corrective wave lower, as a possible A wave or wave A. So I could see, 5 to 7% lower in British equities, right, in the FTSE. So another short that has convexity. Now, um, let me break this down a little bit more, right, to see if you keep breaking charts down, you see now this is a 4 hour chart. You can put a fib here against that low, and you can see a semblance of a count, right? 1, 2, 3, 4, 5, maybe A, B, C, and then back down again. So I like this lower, right? I won't trade against this high, but I can trade against this level right here, which is a fib over the 50%, right? So I could be short against 79.70. So, and if you keep breaking this charts down, if you keep going closer in, you go to the 2 hours, you go to the 1 hour, you start seeing different minor counts that allow you to trade against certain levels, right? So I would be comfortable being short against this level right here, which is around 79.70. All of these charts are published on my site. And all of these charts, when I see something, either a short-term tactical opportunity or a more of a strategic trade, or what I call bucket C trade, I post those on my Discord channel. So all of this is posted real time. I'm just going through these charts so you guys can see how I see things. Maybe I add value to your trading. Hope I do. But everything I'm showing you here is on the site and on the Discord channel. So food for thought there. But that's the way I'm looking at things. One last chart I want to share is silver. I think this is going to be a dump fest. I am pretty sure that this has a very legitimate count. Let's go to the weekly so you can see what I mean. And I'm going to post this on my site with a little bit more detail, but I am pretty negative silver on a legitimate count, and I think it's breaking down. I think it's breaking support. Friday was a very negative day for it. I see a minor count here, and I'm going to put that on the site. But I wouldn't be surprised if we see a further losses for silver. I think the market is positioned. I think the market is positioned in gold, and I think we're going to see a nice little rinse lower in precious metals. With that, thank you very much. If you like the content, please subscribe to the channel. Obviously, please like it. And if you want me, like I say always, to go through any charts, please leave it in the comments. I'll be more than happy to keep improving and keep growing this channel, making it better, improving the content. Any input is welcome and appreciated. All right, guys, have a great weekend, and I'll see you guys on Monday. Bye.